It's risk off today, all thanks to the ongoing trade war between the US and China, which has seen the equity indices drop across the board today. Hello everyone, my name is Fahad Razakzada, market analyst with City Index. Let's get into it. Now, looking at the S&P 500 chart here, you can see that the sell-off was quite intense on Friday. Now, that move might have been because of the fact that we also saw the breakdown of this trend line, which potentially triggered some stops and caused the index to fall more sharply than it would have otherwise been the case. And then we saw the index bounce back on Monday on the back of some comments from Trump, which indicated that it's not going to be a full-on trade war, but nevertheless, the selling has resumed. And as you can see, the index is now still holding below the broken trend line. And now the index is testing support at 65.69, this short-term level right here, which it broke below on Friday. Let's see where we go from here. But the trend line is now broken, so the strength of the prior trend has indeed weakened. That's not to say, of course, that the bullish trend is over just yet, because we could see a bit of a consolidation here, or the selling gather a bit of momentum in the short term before the buyers step back in and push the index higher. Now, of course, we have earnings coming up, and today we had some better than expected results from the likes of Goldman Sachs, which could potentially provide a floor for the markets. But the underlying theme remains about trade war concerns, which seems to be dominating the headlines. So that makes it a little bit more tricky to trade these markets, as headlines could move markets quite sharply in one or the other direction. So with that in mind, make sure that you have sound risk management strategies in place when trading the markets, and that you're nimble and ready to pounce on opportunities when they present them to you. Now, in the FX space, you can see that the dollar has extended its recovery and it's doing quite well against the currencies linked to China, for example, the Australian dollar and the New Zealand dollar, which are down quite sharply. The Aussie dollar is down nearly 1%. But against the safe haven currencies like the Japanese yen, the US dollar is flattish at the moment, and it could weaken given the current mood in the markets. So yesterday we saw the dollar yen bounce back a little bit, but on Friday we saw the dollar yen test this trend line that has been in place since July of 2024. It created a reversal looking candle there on Friday, didn't it? In the form of a bearish engulfing candle, which may have formed at least a temporary top, if not a more significant one. At the moment, though, we can't be too sure if this is the top because of the prior price structure, which has been making higher highs and higher lows, and we're above the key moving averages. But with the US dollar's prior weakness against other currencies, the Japanese yen hasn't really rallied, despite the fact that the Bank of Japan is turning hawkish. So the dollar yen, with the markets being in a risk-off mood as well, is the currency pair that I'm watching closely here, because if risk-off sentiment gathers momentum, then this could potentially pave the way for some real selling in the dollar yen currency pair. So watch your support levels closely. Now, the key support to watch is at around 151, this area here, which was prior resistance and support. We bounced from around that area on Monday, but we could dip to retest this zone today. And if we were to go below it, then 150 will come into focus next, which is a psychologically important level, as well as it marking the 21-day exponential average. Below that, there's not much further obvious support levels until 148, which is where the 200-day moving average comes into play, and this trend line as well. Slightly below it, depending on how fast or otherwise it comes there, if it comes there at all. The line in the sand is obviously the most recent swing low at 146.58, which is miles away from where we are at the moment. So it would take a real sell-off for the dollar yen to get below those levels. But if and when in the future, in the near future, we get a break below that area, then that would be the clearest sign yet that the dollar yen has topped out. For now, we are only seeing tentative signs of a potential market top. But let's not fixate on one particular direction, as things could go either way. And so, if the market were to break above this area of resistance I mentioned earlier, then that could potentially pave the way for more gains. But My base case scenario is that we could potentially see some weakness in the dollar yen given the reasons stated earlier. For more market updates and insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.